Hello, fellow traders. My name is Perry Wilkie. I'm with StartupTrading.com. Today I'm going to talk about the 80% rule. In other words, why when I was analyzing the market on Wednesday, October 6th, between 8:30 and 9 a.m., after looking at the price action since Sunday, 9:26 on, right? I'm analyzing the market while this candle is being traded, and my conclusion is I thought there is a very high probability that we're going to trade up to this blue arrow, which is 43.54, before the day ended. So you can see, we had been here, right? Sold off, went back up, sold off again. I think a lot of people were looking, this is a low. Second test that low. This is come back in for the third test. We had come off of it a little bit, but I think a lot of other traders were expecting this low to break and to keep going. So we're going to get into why I made that call and what is the 80% rule. And if you're not familiar with volume profile, we'll get into that just a smidgen. So when I come into the office, the first thing I'm going to do, right, and I'm doing this the night before, I'm doing this between 5 o'clock and 6 o'clock at night when the market's closed. So this was the previous day. We got the overnight shaded, and we got the bell-to-bell trading not shaded. So this was the previous day. If you look at all the candle bodies, well, the area that I've got shaded in this like cloudish looking color, this is where the significant volume was. This is the value area with my little tweak on it. It's pretty close to how everyone else calculates it. I just instead of having a high and low that is a line, right? I use zones. So this top zone is from 43.54 to 43.59.75 that day, and the bottom level was from right down here around 43.20 up to 43.34.75. So from 34.75 to 54, right, that was the value area. So that's what I'm looking at. And then as we come in, so the next thing I'm doing when I walk into the desk after analyzing the market the night before is I'm looking at the overnight volume. So coming into the morning, there was, almost 500,000 contracts that had traded. And I think we were right around, this is all volume before the opening bell. So we were probably right around 320, 330, 335 when I'm going over the market. That's significant. Usually we'll get anywhere between, on the low side, 125,000, on the median size right around 175 to 225. 175 to 225 would be normal. And it doesn't hurt to look at that, every day to see what you think it is. So we've got, an extraordinary high amount of volume compared to what our average is coming into the bell. So this is where value was on Tuesday, right? We already defined this. We're looking, and I'll edit this for you, between 43.35.75 and 43.54. That's where the value is. So in the overnight session, you can see after, flagging up here for the day, right? We're starting to get late in the day, from 2:30 into the close, right? The market was weak. It went back down to the bottom of the value area. It never really got above it overnight. It continued to just slowly bleed down. It did start to turn around 5:30 in the morning and come up, but it had bounced from basically, if we look at that low, 42.77 quarter, and it had gotten up as high as 43.01. So, about 30 points it had bounced off, but it was down significantly. But we also had, almost 500,000 contracts that went off. So when I'm looking at this, what I see is that if this low cannot be made now, right, you've got 500,000 contracts down here that are pretty much net short. You've got a little bit of buying that come in at 5:30 on, but they're still below what had happened from 9:30 to 2:30 in the middle of the night. So this is where the bell traders were basically trapped above. So normally what I would be thinking is as we come in here, if it was a normal volume day, that we're going to get up to this value area low zone. We might check around it, but it's going to keep being rejected, right? Because all these people want their money back up here, right? But what I thought this day, because of the extraordinary volume, right? If they can't push this down, there's going to be a significant short squeeze. And where's that short squeeze going to go? To value area high. So as we look at how the day played out, right, the opening bell comes in, we are consolidating. If you look across, right, it's staying under value area low, right? It's not getting back up into value. This whole zone, this is a pretty big sloppy zone here that selling should occur in. So you can see once it starts penetrating into where there should be sellers, right, there aren't any sellers. It gets back up into value. Now you're turning around where the previous days traders were, right? The majority of them, right? And then you get squeezed all the way to the top. Notice it didn't even take out the high side as I draw a value area, right? But it did print that 43.54 for the day, right? It could have went the other way, right? But you would know right away if it was taking out those lows. So it was a failure to take out those lows and having a target. Normally, when you're that far below value, you're not even considering the possibility that it's going to go up to value area high. But I did point that out for the profile equity members that day, the equity profile members, and you know, I think a lot of them appreciate it because it kept them from being overly bearish, right? The whole tone overnight was bearish, so they were unable to get that lower. So I hope this helps. If you want to see, this is the actual grid that I shared with the equity profile members. The bottom of it is the overnight volume profiles. The top of it is the bell to bell from the day before. So you can see just this third chart from the left is the ES, right? This is the NASDAQ. The one on the right is the Dow, and the one on the far left is the Russell. And you got, dailies from yesterday's bell to bell action above, and from when the session starts until the opening bell, that's what this bottom value area is, right? So you can see clearly where the overnight traders are trapped, right? They're unable in the morning to get over the overnight value area markers, right? They can't make any progress on it, but they can't take out the overnight point of control either. And then as soon as they pop that, right, they're starting to zoom through the daily value area low zone, and then that pretty much holds the top end once you break into value, and then you just rotate right up towards that 43.54 area. So if you'd like to learn more about equity index profiles and how you can use them as a gauge to see where traders are positioned, to see if there's going to be chop, is there going to be a likelihood that you're going to be selling off that day or maybe rallying, or if it's just going to be a go nowhere day, right? That's what we're looking for as traders. We're looking for direction, right? That's the hardest thing to do as a trader, is you're looking to see, do we want, are we going to favor the downside? Are we going to favor chop? And if chop is what is favored, do we just not want to trade that day? Because it is the most difficult thing to trade, right, as a range, because you don't know how much time you have in that range or when it's going or what it's fading, right? You have to be much more on your game to trade chop than you do to trade trending either up or down. So if you would like to learn more about this, you can check out the equity profiles link that's in this video, and there's a 7-day free trial for it, and you can go through and look at the newsletter. That's where I share these grids that you were just looking at, and then we do a morning rundown of things that we think you should be aware of. I really hope this helps you, and I hope to see some of you in the near future.